All right, let's get the microphone check out of the way here. Let's see if everyone can hear me okay. I'm looking at the equalizer now. Looks as though my audio should be going out to the stream here. Please let me know if you can hear me okay across the various streams, including YouTube, because I've been having issues every once in a while when getting this started, where I have asked if you guys can hear me, and then I also listen through the monitor, and I haven't been able to get it out there. So go ahead and let me know if you can hear me over in YouTube as well. I see there's quite a few people in the YouTube live stream. Please go ahead and sub, and you can comment in the chat box there. And we'll get started here in just a bit. Okay, it looks as though you guys can hear me. Let's go ahead and turn down the music, and we're going to get this rolling. All right, so it's Friday. Let's go ahead and get this started. Hello and welcome to Landy's Crypto Corner. Today is Friday, October 27th, and we're going to take a look at Bitcoin today. Specifically, we're going to look at CME. We'll look at spot Bitcoin here on Coinbase as well. And we're going to take a look at the validation and invalidation points for continuation of this particular move. Now, please don't confuse the invalidation points with, oh my God, everything's going to fall apart, but rather it would be for, more immediate continuation in the coming week or two, and versus an invalidation for continuation rather, which would lead to just a longer form consolidation on some of the higher term time frames. Now, in this case, we are looking at Coinbase on the 15-minute. We will come back to this. But we're going to start with the normal Bitcoin in 60 seconds chart here on the daily time frame. And you can see that Bitcoin has closed below the upper second standard deviation of the Bollinger Bands here, which is now right in the zone overhead that we have been talking about for quite some time, which is that weekly at 34,750 to the monthly at $35,000 or so, just slightly above 35,000 there. And after losing the upper second, the big area to watch to the downside here on the daily is this daily support at 32.4 to the upper first just below it, which should update to around that 32.4 to 32.5 area at close today. And then the big one to watch is this daily, weekly, and monthly at 31.8. So if that area is breached and closed below on the daily and especially a weekly, then I would be looking down to the next set of weeklies here at 30,600 or so, maybe slightly above there. No, it's 30,613. So 30,600 to 30,300. Now, this 30,300 you can see was tested a few times before that nice big candle through. That did take a little pit stop on some lower term timeframes at 31.8 and 32.4, but once 32.4 was breached, even on a minute candle, I believe I showed that already, it was an immediate move to around that monthly at $35,000 even. In fact, yes, the wick was $35,000. Now, when looking left, you can see the importance of this area at this daily, weekly, and monthly level. There is a daily wick into it from early July, and the close came in at 31.5. So if you do want to give it some room down to the close on a daily time frame, you're more than welcome to. Now, in this case, validation for continuation, is going to start to show itself above the open of this candle here that basically started to put in the high. So the open here is just about $34,000. And I'm going to show you in a little bit that that's also the range point of control for volume in terms of the most traded level up here. And in this case, above it, bulls have an opportunity to run that weekly and monthly area overhead again, and then possibly push things up. Below it, it's more likely to come down and test somewhere around the close open here from the 23rd and 24th, which is at $33,000. And below there, the line in the sand for the lower term time frames to hold up and not go down further and test this daily upper first and daily weekly monthly level, that being 32.4 to 31.8, would be this wick low at 32.850. You can give it some room. On some exchanges, it's around 32.8 even. And, that's going to be the big area to watch this weekend. We might see we might see volatility again on the weekend. We may not. That is really dependent on the appetite of retail, and the whales who are in the market may want to move it over the weekend. We don't really know that, but we will come up with the shorter term time frame levels to watch as well a little bit later. I'm going to be spending quite a bit more time on Bitcoin today versus the traditional markets look. So we will look at Bitcoin. We are going to look here at the regular chart, and we're going to jump over really quickly to look at CME on the daily with Bollinger Bands on. So it's pretty interesting that on CME, Bitcoin plays very, very nicely with the Bollinger Bands. Like, it's kind of picture perfect most of the time. And in this case, you can see the close open. And this is something that I had already kind of talked about. Bitcoin moves through the top side of the Bollinger Bands, gets closes outside of it, indicating aggressive expansion to the upside as soon as it closed above the upper second here at around 29,685. As soon as it closed that there, it's expansion. So we start seeing expansion through. We want to see some mean reversion. In this case, where is that level? Well, go figure. The upper first is right at 31,900 in this case, around $32,000. And this happens to be that close over here. 31,925, call it 32, whatever you'd like. That upper first is coming in at the closing highs of this previous consolidation range. So very, very important for the bulls to hold up around that area on CME. If it is dropped, I would be looking for things to run down to around the $29,000 area. Now, we will see on the next close open, the upper second standard deviation start to expand towards the highs, maybe even past it, just like spot is already doing. But CME, keep in mind, is running a little behind because it is closed over the weekend. So in this case, below the upper first, likely looking somewhere around the upper $29,000 to $30,000 region, probably in and around the weeklies if I had to guess. And there is some the basis band is coming in around some pretty important supports, and this was a support resistance level that had a nice pop up and then a breakdown to form this bottom over here. So keep that in mind. Below that basis there, you're getting below $30,000. It's a lot more bearish to come back down, maybe even all the way down to the mid to low $28,000 regions. There is an argument to be made, and I saw this in one of my chats there, that we could see a bounce in the upper $28,000 region, lower $29,000 region. Maybe even the upper $29,000 region. But what I'm going to start to show you here shortly is that if we see any higher term time frame closes below around $30,000, we're going to see a big momentum shift on some longer term time frames. So that would indicate to me that the bounces, are likely going to get sold into for a little while to the top side, and we're probably looking a little lower. So, below 31.8 basically. I'm looking, into the 30,000 and upper $28,000 region. It likely, tests down even on a wick basis a little bit further, though, in my opinion. As it stands right now, though, this is an expected pullback. No big deal. We do see that Stoke momentum here. This is the KVDB Advanced Stoke. And this is from app.crowntrading.net. I'm a really big fan of their developers over there. I do not have any affiliation or affiliate links or anything like that. We'll look at the at a Stoke that also has pivots that you can find in the indicators library for free as well. But this is pivoted at $33,000 right now. It's likely going to end up a little bit higher than that after close. You can see that closing anywhere above there today, the projection on this particular indicator is showing that, Stoke would still be pointed to the upside, to be fair. Let's go ahead and compare that to a free Stoke indicator. This is the BA reverse Stoke. This is showing the same area as well. 33.42 rather. And in this case, you can see that on any closes below $30,000, Stoke exits the overbought zone, at least as it stands right now. This is likely to be much higher than that when this opens on Sunday. So, we're at a little bit of a disadvantage until we see this open as to what some of these pivots are. But for right now, it's closing well above there. It's pressure to the upside, even on the downside move, indicating that, if it does breach some of the areas that we're going to talk about, especially 32.4, then we're going to see all of these momentum oscillators begin to turn to the downside. Now, the 2-day for CME is also pointed to the upside. 30,400 is the momentum pivot. This is closing today. I did want to point this out. And some of the important areas for the 2-day when looking at standard deviations away from the mean, which is the basis down here at 27,850, are going to be the upper second. And that's coming in, guess where? $33,000 just happens to be right around the pivot for that daily. The upper first here is at $30,075, and that is below the momentum pivot on the Stoke. So in this case, if we see Bitcoin trading and closing around that upper first, momentum will be shifting to the downside. Excuse me, on the 2-day. Sorry about that. We can see that we have aggressive expansion to the upside. So this is, still, in my opinion, an ongoing move to the upside. It's still pressure up from the volatility standpoint. It's still pressure up as it stands right now on the daily for volatility as well. This is going to be a different look on spot, but this is important to understand. And the other big thing that I want to call out here is that we don't have any in-trend bearish divergence right now. This really doesn't become very bearish or doesn't turn bearish even in the slightest outside of pullbacks until we start seeing bearish divergence build. Now, to be fair, there is a bear div here that is from the January move. Now, that's all the way back here and from the move off the lows here on the daily. That is a not an important drive of bearish divergence. You might see it populate on some indicators. It is not, in my opinion, anything more than a corrective drive. And what you want to be looking for, just like when we were looking at Dixie on its run up, is you want to look for in-trend bearish divergence. And right now we do not have any. And there is no possibility because we don't have a higher high just yet. And you can see that it avoided it on the 2-day. So this is looking pretty good, to be quite honest, for the integrity of this move. 3-day, it would still be populating on any high put in. Now, of course, on a 3-day, we can see that the Bollinger Band's upper second standard deviation is right there at 32,950. Again, $33,000, pretty important level for the Bollinger Bands. And, between 32,800 and $33,000, that's basically the bottom side wicks of the lower term time frame range that's being built right now. And if it is lost, we see the upper first is coming in there at 30,450. So that would imply being below that level that the basis is more likely to be tagged. Now, of course, on CME, this isn't going to be closing until mid next week. The basis band is right there around $28,000. Momentum still pointed to the upside above 30,300, of course, and still getting, it's still, 25% above the moving average for BBWP in this case as well. We don't necessarily need the chart for that. We know that BBWP is in an expansive posture. There is in the Landy bands, which you can find a link to in the description below. It's free. If you'd like to grab the indicator, it has BBWP in a box down there for you. The 4-day we can see is only just beginning to expand. It's about 20% above the moving average, 30/10. Any closures above the upper second, which is closing today. So one of the big reasons why I'm pointing that out is because we are going to get a close today with this. And the upper second standard deviation is right there at 32,500. So it's 450. It's basically around where that breakout point is on the daily level at 32.4. So that is really going to be the shorter term time frame invalidation to the downside for continuation. And the upper first coming into, we're saying some of the same levels over and over again, right? It's coming into that area at 30,400. So that's that 30,300 to 600 weekly level. It's much the same here on the 4-day chart for CME as well. And we can see that it's pressure up on any closures above 27.7. That is the 4-day Stochh. Of course, that's going to move up and probably move up pretty substantially today. Basis band is down there at 28,300. It's a daily level, 28.4 to 6. You've probably heard it before if you are watching the Bitcoin in 60 seconds shorts videos here on YouTube. If we look at the 5-day, which just closed, we can see that Bitcoin closed above the upper second standard deviation, and it's only coming back to test it right now in the early trading of the 5-day candle. And that is at 33,640. And this is, this is nice expansion. This is what you want to see. Now, it does give it a pretty big range down to 31,170 with that upper first chasing. And I will say that, for CME and spot price, if we do see 31.8 break down, we're likely going to see 30,000, the $30,000 level get tapped. You can see there's close open structure here on the 5-day right around that upper first at 31,120. I think the mid $30,000 in the lower term timeframes is very, very viable to be looking at. Those weeklies at 30,300 to 600. And the basis is all the way down there at 28.7, looking very good. Bitcoin can go all the way back there, and it's perfectly fine. It just doesn't, it would mean that there's not going to be continuation, in this current move. Right? Then we're looking for a new move to form from there. And the Stochh here is pointed up on the 5-day for CME, 27,373, so 27.4 or so. And of course, this should match the weekly. No, it's a little bit different because we had the 5-day close before the weekly on CME. So in this case, the weekly is looking to close today above the upper second standard deviation, which is at the range lows of the lower term time frame wicks on spot price in this case, and this is 32,825. CME is currently trading at 33,845. So it is about $1,000 above there, barring any kind of sell-off after traditional market close. I would be watching this to see if it closes above the upper second standard deviation, as it's likely that spot Bitcoin will follow through. If it doesn't, then there's probably some downside risks for the bulls here. 27,289 is the momentum pivot coming into close today. And, being above the upper second standard deviation, and we will flip this. We'll call out what we've already talked about prior. This is, getting into secondary target zone for the lows here with that drive of bullish divergence, in this case, hidden bullish divergence. And, easy targets were already met, which was the top of the previous range. And then the breakout targets are kind of where we're at. And I did want to note where the bullish control zone is currently. That is at 30,468. So between those weekly levels at 30,300 to 600, I believe it's 30,400 to 800 here on CME. We can actually look at that as we are on the weekly chart. Nope. That's going to be, man, what was that weekly? That weekly was 30,590 to 31,120, where the upper first is coming in on that 5-day. Interesting. So $500 range, where it was much tighter on the $30,000 range on spot. Sorry, my voice is not doing well today. There was a Bills game last night, so my apologies. For those that didn't know, I'm a massive Buffalo Bills fan. Have been my entire life. So I'm glad to see that they won a game. They haven't looked so great lately. Anyway, in this case, wait for this weekly close coming in around 2 hours and 30 minutes here. And I'd be watching that upper second standard deviation. Let's go ahead and take a look at BBWP. Well, this looks like liftoff. This looks like, it's going to follow through after close day. We already have expansion of BBWP, and the moving average has already confirmed coming into close. This is only going to give further confirmation of expansion to the upside. Now, of course, being above the upper second standard deviations, we want to see close over close. So we really do want to see continuation next week above the upper second standard deviation, which is likely going to move up somewhere around 34. It's currently at 32.8, somewhere between 33, 200 to 34K is probably where it's going to end up. And we'll, of course, see that when it opens on Sunday. And we'll talk about it on Monday's live stream. Now let's go back to spot price action. The weekly is pivoted. Well, the upper second standard deviation is a little bit kinder here. It's at 32,630 right now. So again, we're right in that zone that we've talked about over here, this 32.4 area, and then where the daily upper first is likely going to end up around 32.4 to 6, maybe even higher. If Bitcoin does not, push the highs again, and or if it does, it's going to continue to pull the upper first standard deviation on the daily up, and then that's also a very important area. It's the upper second area on the weekly. To be fair, it's a little bit above there, 32.6, but if we do see a closure above there, we're looking at confirmation of expansion on the weekly, and aggressive expansion at that. What you want to see again is close over close to maintain that aggressive expansion. Upper first is down there at 30,500, falling right there at that weekly high, around that 30,600 area. It's probably going to be above there if Bitcoin can close above the upper second, especially. It's probably going to be somewhere around the $31,000 wick high over here, maybe slightly higher, low $31,000 or so. Now, the weekly, of course, will not. It is going to be. I'm sorry. I was thinking that the 5-day didn't. 5-day close open was earlier, but it's actually today. That's right. We have a 5-day, a 4-day, and a 3-day close all coming in today. That's right. Today's a big day for spot. Wow. I totally forgot about this. The upper second standard deviation is at 31.8. That's the daily, weekly, and monthly overhead resistance that has been reclaimed and not yet retested. So don't be surprised if it gets retested. It's below there that it becomes a problem. And you can see that would also be an issue for expansion on the 5-day. So this is likely going to update and start, coming up somewhere around the mid 32s, possibly $33,000 level. The upper first is right there at the close open, or at $30,000 or so. So below the upper first, and it's right back to the basis in terms of targeted zones, and that is sitting at 27,850, likely to update around 28K and higher on today's close. We can see that momentum still pointed to the upside here on the 5-day, 29,150. Likely to, this number is probably going to update pretty aggressively. So I'm not even going to hazard a guess there. We have liftoff of the 5-day BBWP already confirmed. Of course, in the last candle, this is only going to further confirm that. This is indicating that this move is still ongoing, and it may take a while. Again, there's a big range. That was a big candle, $5,000 candle or more, in one go. In fact, I think it was more than $5,000 on this candle, right? Where was the open? 30? No, it was 5,000. So $5,000 candle is looking pretty darn good, right? This is basically already confirmed expansion, and it does give those bigger ranges in the lower term timeframes. We've seen more price action in the lower term timeframes in terms of price range than we've seen in quite a long time. In terms of the consolidation down here, where ranges were getting really tight on the lower term timeframes, and then we broke out of those ranges and started to move up, and then mean revert. So volatility started to pick up around the basis, and then we just got an upside move. So now that we're back in a range, we have a big range to play in, and we're going to look at that range in just a moment. 4-day did already get a prior closure above the upper second and third. So, mean reversion back to the upper second at, guess where, $32,000, right in between the 31.8, 32.4 area. This is going to update most likely to around 32.4. So below that would be below the upper second standard deviation. And then we're looking down to that upper first as being a possible target. That's coming in at 29,750. And I believe this might actually line up with, and I hope you don't mind, I'm going to call out his name. Torque had a target down there. The only, and I don't disagree with his assessment, by the way. I just think that things would be a little bit more bearish than what he had for just a provisional kind of like throw the idea out there outlook. Obviously, watching price if those levels break. My only counterpoint to that is I would be a little bit more bearish if we were to head that way. And that doesn't mean I'm going to be right, by the way. I could very well be absolutely 100% incorrect. But I'm going off volatility and momentum pivots for that particular price action. And then that would also violate some of the trends on some of the medium-term timeframes. Not the daily, though. Not the daily. Daily is going to be, something to watch. Now, $31,000 is the momentum pivot for the 4-day. I expect that to be somewhere around 31.5 to 31.8 on the next close open. The 3-day closing today, well above the upper second and third. This is beautiful expansion. This is just, I love this. Upper second standard deviation is at 32,150 or so. Upper first is there at 29,862. Below there, I'm looking back to the basis somewhere around that $27,500, $28,000. We're getting that number a lot to the downside. The 2-day is going to be closing with today's candle, still above the upper second standard deviation, still getting aggressive expansion to the upside. Upper second is at 33,200, so below there. Looking down to that upper first, somewhere around 30,800. That's the weeklies down there. This will likely update somewhere around there, probably a little bit above that $31,000 level, if I had to guess. Now, 2-day for the, and we'll go and look at the 3-day pivot as well for momentum. 31,300 is going to be the momentum pivot on the 2-day. And the 3-day is at 31,252. So big closes today. We've literally got the what is it, the quintuplet, right? You'll have to correct me there. I'm pulling that one out of my butt. So we've got the daily, 2-day, 3-day, 4-day, and we have the 5-day coming in today. So this is pretty important closes coming up. And okay, I looked up. Yeah, okay. Sorry. I forgot to mute your stream over there. You guys can actually talk to me today. Yeah, let me mute this real quick. It's okay. It's okay. No worries. That was my fault. All right. So daily Stoke is looking to turn down on any closes below 34,300 today. So below $34,000, not looking like, that's going to keep its cross to the upside. Basically, we'd get an initial cross to the downside. You can also see that volatility is looking to move below the moving average, but we need to see close over close, and then volatility, the moving average on volatility, cool down as well. So just keep that in mind. It's not a death sentence either way. Like with the other oscillator, with the other time frames still pointed to the upside, we can get bullish resets on the daily, 2-day, 3-day time frames, and still looking very, very good coming into the monthly close. And that's actually where we're going to head next before we go to lower term time frames. So the monthly is currently pivoted at $23,000 for momentum, and the monthly is right here at the upper first. The monthly, of course, we will look at this again prior to close, so we'll look at it on Monday. But 33,600 is the big area. If we see 33,600 closed above, I would give it some room too. I'd like to see a 33,800 and above close on the monthly. The upper second becomes the next big target, and that's going to be at $40,000. Now, this might move down to like 38, and just so happens that we have the $35,000 monthly here. Upper second's likely going to update and be somewhere around, it's already around this wick high at $40,000. It's about $500 above, but I'd be looking for it to head towards 38.5 or so, which is this monthly close open. So things are lining up very nicely. We had at this point, we were looking at this area as being an area of interest, possibly last month, if we put a low in, from September to October. So we're seeing that we got that. Next big area to the upside would be the 38,500 area on the monthly when you're just going off close opens, and that is likely to line up with the upper second. So we'll revisit this on Monday's live stream as well, but I did want to make sure that I called that out. Here's the other thing. We're going to have a little fun with fibs. Log scale. So we're going to use log fibs, and we're just going to fib this move real quick from high to low. I believe that's the high. Yep. And we can see that right here, let's make sure this is on log. It is. From right here, from high to low of the current move, we can see that the 618 is coming in at 30,800, and the 50% fib is coming in at 29.6. So that is also where the current daily basis band is. So keep that in mind. Is it trifecta? It's 4 closures, right? So Quinn is 5, I think. I said I said it wrong. It's the quad closes. Anyway. Yeah, we have a rare quad close, right? You'll have to correct me if I'm wrong on that one too. I'm tired. Spent a lot of time celebrating a very very stressful win over the Tampa Bay Bucks last night. So, all right, 12 hour, we're going to move down some time frames here. Looking at the possibility of losing that upper first standard deviation today. That is at 33,870. So that's probably going to move up somewhere around $34,000, and keep that number in mind as we move down the time frames here. Basis is coming in at 31.5, likely to move up to around 31.8 in the next close. So again, lining up with all the big areas we've talked about. I'm going to keep calling it out. That daily, weekly, and monthly level, if that is reclaimed bearishly on a close, especially a close that moves into the weekly, then I think we are looking for deeper mean reversion. Could be wrong, but going through the momentum pivots and kind of where some of the important areas are for the standard deviations, it's prudent to be looking a little bit lower, even if things did bounce aggressively. But we could just see things go full bull mode. They've done it before. 8 hour. We're looking at the basis band moving up here on the 8 hour. We've got basis band at 32,666. Oh, well, that's not great. But if you're into numbers, if you're superstitious, the upper first is there at 34,560. Almost 570, sorry. Now, this is going to move up in the next close at the end of day today. And anywhere above the lower first, which is right there at the breakout prior to the big up candle there at 30,900, is looking good for the lower term time frames. Would still maintain trend on the 8 hour as long as it's above 29.7. Big ranges we're talking here. The momentum pivot is going to be down below 34,680, we'll call it. We see that volatility, of course, dropping. Bands are catching up to price action as it consolidates and goes sideways in a range. We can see that the 6 hour did update, and we got a tap on the basis band, including a close open at its previous position, its current position, I should say. So the basis band has updated to the close open. Aggressive downside here for volatility, as you can see reflected in the contraction of the Bollinger Bands. The upper first is there at 34,765. The lower first here is at 32.4. So it's 32,350. So that, of course, falling right into that support zone that we've talked about, probably too much at this point. The 6 hour is going to be downside angled on any closures below 34,640. So it's got a little work to do if it wants to get back up there and reclaim that. We are starting to see possible expansion. This is a false signal, in my opinion, unless we see closures below the lower first. If you see closures below the lower first, well, then that may actually turn into a move to the lower second, which is then currently coming in at like 31,150 or so. Just right there around that breakout move for the 6 hour time frame. So something to keep an eye on. And moreover, I would actually, coming into the weekend, I would keep a very close eye on the 4 and 6 hour, as the 4 hour is currently pivoted at 34,300 coming into close today. Coming into the last closure of the day, or the last 4 hour session of the day, I should say. It is right around the lower second standard deviation. You can see possible re-expansion is on the table, but I would tell you, because it is right around the range lows and it is against the lower second standard deviation, what you should pay attention to is where it closes. If it closes above the lower first, which is currently at 33,800, and we'll see in the lower term timeframes, especially above 34K, then I would be looking to the basis as an area to get tested around 34,160. If it does close below the lower first at around, it's going to be 1 p.m. my time, 4 p.m. Eastern. And, we're going to be looking at another we're probably looking at another test down to the lower second area to test the lows over here. If I had to guess, we'll look at that in a little bit more detail on lower term timeframes today. But in this case, the pivot at 34,300 likely going to update to the right around where the lower first is, probably somewhere around 34 to 33.8 in the next close. And then we'll see, of course, closures below the lower first. We'll see the lower second move down. It's probably going to come in somewhere around, 33 to 33.2. Might even move. Yeah, it's probably going to come in somewhere around this low here at 33.2. So I would give it a range 33 to 33.2 is kind of where I would be looking for that. If we do see it get back above the basis from where it currently is, the upper first is there at 34.5. Big area above $34,000 that we're going to look at as we move down the time frames. 3 hour is going to be a good indication of what may happen before close in terms of momentum and where momentum is headed, as the 3 hour is currently pivoted at 33,750. Now, Bitcoin is trading at 33,660, so it's a little under there, not by much. It is right on the lower second standard deviation of the Bollinger Bands, and I wouldn't, until we see the range break, that's when we start looking for the expansion. It's got to come with the range break to the downside here. 2 hour is probably already getting to a level. Yeah, so it's already pointed to the upside, 33,700. Now, we did see slight expansion to the downside, right? So we got expansion to the downside. The 2 hour closed below the lower second standard deviation. But because we saw such an expansive move, and we're not seeing, we did see a close below the lows here, but we're not seeing, it's not until we see continuation below 33,240 that I start looking at this as, it's going to come down to 33,000 on this wick. And then, then we're looking at 32,850, and then below there, the 32.4 daily to 31.8 daily, weekly, monthly. Now, in this case, this is a possible setup for a reversal if we see the lower second standard deviation closed above in the next 3 hour close or 2 hour closure. Sorry, it's going to close with the 4 hour. In this case, the lower second is at 33,600. So coming into the last 50 minutes of this candle or so, that is going to be the area to watch in the shorter term time frame. So 33,600. It's about $60 above currently. The hourly also has a potential setup here on the hourly, at least to test a little bit further up to like 33.8, which was the important area on that 4 hour. The lower second standard deviation is coming at 33,621. This wick high here is coming in at 33,683. If we see a closure above there, that's a technical low. And then we start looking towards that lower first at 33.8 to this open, just above it at 33,869. Nice. The markets really are a meme. That's also this low over here. So it's basically got to reclaim this low at around 33,760. Take out this wick high at 33,683, and then 33,760 or so to go test around 33.8. And above there, this would be 33,858. And then above the 33,869 candle, we're looking at 34K possibly getting tested to the basis, which is likely going to, it's likely going to be around this low and then in the next little while. It's currently coming in at $34,000 already. So that's the next big area on the hourly. Let's drop to the 15-minute. Let's get a range. The big breakdown area for this range is going to be, basically we can pull an anchored. I like that they have updated this. This is the wrong candle though. Let me do this the right way. Let me get the top of this candle here on the move, the highest volume candle. All right, so now I'm going to compare this to the volume map that we have, but just so that you can see kind of where the most traded price was, it's right there at basically where the hourly basis is, and that is at around $34,000, slightly below it. And in this case, 33,784, you can see is fallen right on the wicks as the value area low. Picked up this low, this low, this low. Yes, it got swung, but you can see that we're also below this little node here, this lower volume to higher volume on the lows here. If it does get back above, it's likely going to go test 33.8. So we can also see this with our volume map that we've been building and updating throughout the past couple of weeks. We can see that, again, right around $34,000, we have the open over here, right? So that's where the point of control of the current range is. There's also a lot of that is defined by this candle close, right? So keep that in mind. If you did want to exclude that particular candle, you can come over here and just grab the low of the candle over here. And you can see that, well, it didn't do much. It's still the same area, even to the right of that, because of all of the consolidation and spiking in and around that close open over here, and then kind of bouncing on it for the past, day and a half or so. So something to be aware of there. Now, because we have started to get volume spikes in these areas, we can see that I've told you that when we have a big range for the volume map here, it's basically below $34,000 at this close open on the 15-minute. We got a big range down to 31,750, 31.8, of course, to 31.4, and then 31,250 down there on the close open prior to the breakout to new highs. So between this guy and this guy, but there's a lot of space for Bitcoin to move in terms of volume area, and that would be right down to, again, 31,750, 31.8 area. Now, because there was volume in between that area, I mark it just temporarily with trend lines and hold shift and pull across to get some zones of interest. So let's turn on volume and inspect this a little bit closer. So you can see the little bit of high volume on the high up here, and then higher volume on this particular low right here. Now this low is coming in at 33,800. Again, want to call this area out. It's very important to this close open at 34K. Big area. You can see bounce here. Did lose it. Put in nice high volume here at around 33,250 or so. So there's your 33.2. Next biggest high volume low was this guy here, and that's coming in at 33,000. Then of course we've got the higher volume wick low down here at 32,525. So below there, of course, I'm definitely looking for 32.4 to 31.8. And that's where you can kind of fill in this area between the high volume move. So for mean reversion, these are going to be the levels that we're looking at. We also have this close open. This is a pretty important area at 33,474 to that 33,250. So when we look what was holding up price in the range up top, it was this low area, right, at that 33,800 area, 33,700 to 800, holding up these lows prior to the volatility back down in terms of the move from the highs. moved up, retested the highs, and then started to base around that area, lost it, and stepped it down to this close open and this wick right here. And that's where we are currently positioned. So above, basically above this spike low right here at around, 33,690. We've talked about these numbers prior. Then we are looking up to around that 33.8 to get tested, and then above it 34. And when we're above 34, there is some higher climax selling in these in between candles here, but I'd be looking for this area to get tested in the low 34, 1 to 2 area. If that area is taken out, I'm looking for 34, 4 to 5 again up here on this high. So that's kind of where we're at with Bitcoin. Long one on Bitcoin today. It is important that we understand, continuation and invalidation. So below 32, below 32, 5, 6 area, we're looking at that daily. And then down to the daily, weekly, monthly. So 32.4 to 31.8. Things are fine above there. It can come down there. It can bounce around. It can swing the lows as long as it's not closing below 31.8 on the daily and medium term time frames between the weekly and or weekly. It's looking good for further upside over time. Weeklies and 5 days take a while to play out, so you got to give it some time. For immediate continuation, obviously above the highs there at 35,157, but looking much better above 34K. And then, validation to go test the highs, probably going to be 34.5. So that is pretty obvious on a lot of time frames. So above 34, bulls have an opportunity. Test 34.5, get above this high, which is above this wick that was holding things down. To be fair, that's actually 34,272. So above 34, it's that wick low was holding this consolidation down. Then it's clear to go test, 34, 4 to 5, and above there, it's probably going to run 35 again. And then that keeps, the hopes alive for the bulls that they can possibly break out of this high to some of the areas that we're going to talk about overhead. And then we're going to wrap this with some Dixie gold and a quick look at traditional markets that, everybody, the world's on fire over there, apparently. Above the monthly, there is a weekly, and this would be the main target overhead if we do see a breakout for myself that doesn't just swing the highs and come right back into range. So I would be looking at 30. This is 36,282, so 36,2 to 3 at this weekly, and then above it, where the upper third is coming in, to 37,6 to 700. Above there, I'm looking for that monthly to get ran. Now, of course, that is where I'm expecting, if price doesn't push through before the monthly close, that's where I'm expecting the upper second standard deviation on the monthly to come in, and that's at 38. 38.5 to the weekly overhead, which is right there at $39,000. And quite honestly, if it's going to test the monthly up there, I would give it a little bit of room, $39,000 to $40,000. And, if it did get above there, there is a technical weekly area at 42,000. So, above the upper first on the monthly especially, but we're going to revisit that on Monday before close, right? We will have a day. Yeah, it's going to be monthly closes coming in on Wednesday, so we'll even live stream. We'll have 2 conversations and a very close look at this. But yeah, all right. 32,800, Cheryl. I just looked over there. Below 32,800. It's likely going to go test 32.5 in the lower term time frames to, the daily down there at 32.4 to 31.8. It's more likely, or at least available, if it doesn't just swing the lows here. And of the local lower term time frame range. That's going to be it. Let's go ahead and look at Dixie. Sorry, that was a long explanation, but I'm seeing a lot of like bull hopium for immediate continuation, like over the weekend, and I'm seeing a lot of bear, what I consider copium, above 26.5. I think it's all copium. Doesn't mean that it doesn't turn intensely bearish if things break down back into the range lows, the range lower. That was the Bitcoin consolidated in for 6 months, more than 6 months. Shit, how long was it in that range? Let me look. I gotta look. 1, 2, 3, 4, 5, 6, 7 months. Jeez. Now, to be fair, 6 months because it's only stayed up there for 6 months. But by the way, don't fade structure that looks like this if you don't want to get wrecked. Like, this is a big monthly up candle. You got to wait for the invalidations to get hit for continuation, right? Once the invalidations get hit, good to go. Then you can fade all you want. Just watch those supports, right? Because you don't want to get thrown back in your face. Let's go ahead and look at Dixie. Dixie looks good on the monthly. Coming into the monthly close, 104.47. Ew, that's a consolidation to a breakout as well. It might have some trouble on some lower term time frames, but I wouldn't necessarily be fading Dixie either, to be quite honest. It is in a consolidation right now as well. And we're looking at, this is what I did talk about this with you. The upper first, it's a downside move to the lower first. If it's going to maintain trend to the downside, you don't want to see it closing above 106.78, right? Get a lower high at the upper first to upper second area around the highs, and then come back down below the bases, which is at 106.35. Then we're looking right there at 106 to 105.88 here at the support, down to the lower second there at 105.5. Below 105.5, test that low at 105.17, and then we're looking for 105 even to 104.69. After 104.69, we've got a low over here at 104.42, and then we can start looking for a more aggressive downside move into 104 to 103.5 down here. If it hangs out above this support area here, we're looking at the daily continuing with upside above 105.91. And if we start to see it cracking back above the highs here, and especially that upper second standard deviation at, we'll just call it the highs. If we see it above the highs at 107.34, it's going for 108 and possibly more. When looking at the 2-day, this is pretty clear as well. 106.65 would be the pivot right now. That, of course, isn't going to close till mid next week. So if we start seeing it bounce back up, we're going to get an oscillator turn plus, the highs get ran. If it's going to remain bearish, you want to see it below that most recent high. That's all on the daily, and then start cracking back down below, 105.88 especially. Lower first is right there at 105.25. If we did see it, crack below the 2-day basis band, which is right there at support, below 106, basically, we're looking for, 105 to 105.25 again, and then possibly looking to the mid 104 area down by the lower second. To be fair, it is pressure down still below 106.66. And it's been testing that area on the 2-day. What's the 3-day looking like again? 106.66 as well. That's also closing mid next week. They close open at the same time. That's right. 2-day, 3-day, 4-day, and 5-day. 5 days today. So yeah, 4-day is going to be down below 107.31. So if it starts cracking the highs, watch out. It's just going to turn right back up. And then everything else to 666, which is, of course, fitting for Dixie. 107.14 for this 5-day, which is closing today. So this is going to maintain its downside pressure. What was the high there? 107.34. This is likely to come down below 107 for the momentum pivot. And this should be the same as the weekly 107.14. No, so no, it's 107.14 for both. So still pressure down, but coming into that monthly, it's about ready to get a monthly turn. This would be the outlier on the higher term time frames, as the 2-month is still pointed down. Oh no. Oh no. Hey. The 2-month could turn back up above 107.08. So something to watch coming into next week. Ooh. The quarterly is still down though, 112.50. And to be quite honest, if the 1-month and 2-month turn up, that pivot at the quarterly 110 to 112 area is probably going to get tested. Doesn't mean it's going to, but it's a higher probability that this momentum pivot from the quarterly is going to get tested. So that's my outlook on Dixie. It's pressure up right now. Bounce off the lower second. Standard deviation of the Bollinger Bands. Beautiful bounce. Right back to the upper first. It's trying to hold that basis, so above the basis. 106.35 to 106.50. It's looking pretty good. And it's trading slightly above there, to be fair. Yeah, but not good. Not good if this starts expanding to the upside. Well, traditional markets are not looking great. We've got gold. Gold's doing gold things. Gotta love gold doing gold things. Now, we talked about this the other day. What was it? Wednesday right here. The opportunity for a low being set. Low got set. And then we were looking for between 2000 and 2010. And then just kind of take it from there, 2010 to 2020. So we got that low set back here yesterday on Thursday's candle. This was a technical low. So we got the close higher than this area here and higher than came down, set a higher low. That's what you want to see. And then above 1980, boom, up. And went right to the areas we talked about, 2000 to 2005, and then 2000, it's basically 2000, 2010. 1987 was kind of where you wanted to see it get above, and 1997 over here. And then it's, likely going to test this order block over here as well. So keep an eye on this area. It actually did at 2007 already, to 2022 up there. So if we do see this, crack above around 2010, then we're looking at the top side of this order block around 2022. Above there, just take it $10 at a time, 2030 to 2040, and then possibly 2050 up there at the closing highs, and it might even go for it, 2080 to 2100. Looks very good. We did get a momentum continuation here and a little bit of a turn back to the upside here. $2,000 is going to be the pivot now. That's more a reflection of where the wick high is coming in today. So it's going to be right on top of price. Just kind of like what Dixie was doing. We've got the 2-day starting to get maxed out on volatility there, but it's fine. It's got at least another 2-day closure in it to stay on the volatility highs. The upper second's coming in there at 2014. So smack dab in the middle of the next big target area between 2010 and 20. Now things start to look like longer term mean reversion back below about 1963. Now, of course, it's trading on the highs right now, but it is very volatile. So volatility, when the bands are spread out like this, especially on the daily 2-day, volatile moves are very, very likely. That just means lower term time frame, larger movements. 3 days looking good. Above the upper second, if it can close next week above this upper second, it's looking for continuation to the highs. Test around that 20,000, or I'm sorry, $2,080 to 2,100. Looks very good. We're getting volatility expansion to the upsides, continuation above 1860 for the 3-day. And it's got time. 1821 for the 4-day. Got time. We've got the same look on the daily, 2-day, 3-day, 4-day for gold like Dixie. So in this case, it's looking like continuation of expansion to the upside. Upper third almost got tapped. It is adjusting in real time. So 2012, it was at 2010. So looking good. 59 over 46 for volatility. 1821 pivot. And then, of course, we've got the 5-day closing today. And if it does close above the upper second standard deviation, looking for continuation to the highs. 2006 is the pivot for today. So 2 hours and 25 minutes, something to watch. Again, we want to see closures above there if you're looking for the highs. Doesn't mean that it can't just grind it out. It did tap on it prior, get a close above it. Looking pretty damn good. And we should be getting the same look in terms of momentum pivot, 1887 for the 5-day and weekly. Now, the bands are going to be a little bit different. They are not. They are exactly the same right now. Cool. We don't have staggered closes on the weekly and 5-day. This is nice. And that's going to be $2,006, same exact look. That's weekly expansion to the upside. Weekly's pointed up. 2-week is looking to turn up. And the next, this is something we'll talk about next week, but it's looking to turn up fully above 1912. If this weekly closes there, this is very likely that this gets continuation for a little while. And this would also be, the etchings of expansion. So this is going to be the narrative for next week when we're looking at gold. The monthly swing of the basis, upper second standard deviations there at the highs, $2,075. And to put this in perspective, this is a bullish engulfing candle on the monthly. So I don't think you want to fade that. I mean, maybe in lower term time frames, sure, but not from the higher term time frame perspective, like holding on to shorts for this. And I mean, even in the lower term time frames, by the time you're exiting an options position on this, you probably paid for that position and didn't make any money. Considering where the spreads are for options on gold right now, it's not a very attractive put at this point until we start seeing like some kind of cool down. This move, I think, has some legs. Traditional markets, taking a leg down, starting to get into dangerous territory for traditional markets. 32.5 just broke down today for Dow. So let's go ahead. This is continuation. I do suspect it's probably going to get a pity bounce pretty soon. So below this low over here, what did I want? I don't want volume. So next big area below this low over here at let's go ahead and just throw on a horizontal. That's 32,586. Then we were, that was the low and the high. The next big area is going to be down here at 31.8 to the actual area that bulls need to hold, or it's going to be a run of those lows again. We've talked about this prior, but this is going to be the zone down here to keep an eye on. I am just going to hit every single tool over here before I actually get the right one. So to the downside, we're looking at things looking a little dicey for the bulls right now, because if this low at 31,430 gets taken out, it is very likely that this low, the major low down here, gets a retest. Now, to be fair, this is where the reversal started to break out. Okay, so this is going to be a big area, 31,430 to 31,800. You might see front running come in around 32 even. But a daily close with aggressive expansion of the Bollinger Bands to the downside, 32,855, which is accelerating away from, but will update when this opens on Monday. It's going to update. It's coming into a pretty important area. So I would not be surprised to see bounces around this area. Let's look at the weekly. Weekly's still down, 33,255. This is going to be chasing. It is on expansion. Expansion's even getting a breakout above the 50%. So more likely than not, this low is getting tested. Below there, of course, you still step it down. There's a low over here, just below it at 31,289, to the actual wick low at 30,680, and then there's still a low at the upper $29,000 to $30,000 region, but that of course means that this low is likely getting tested in the upper $29,000 to upper $28,000 region. So is it a given that it's going to break down? No. And anybody that's telling you that it's a given that it's going to break down is being silly. You have to see it happen. It's not a given. Nothing is ever a given. NASDAQ has a lot more room to fall before it even gets to the weekly. So let's go ahead and mark the weekly. Right. And to be fair, if we're going to mark that weekly high, we should give it a little bit of a range to where it's testing right now, which is this weekly structure over here. Structure without the whistle. And then this low side here, which was kind of where the consolidation came in. So there's a few big zones to the downside to be looking for from the weekly perspective. Again, 14,452 on the momentum pivot. That's going to update aggressively. NASDAQ's actually holding up a little bit better than Dow right now in terms of structure. 14,163 is where it's trading at. I do suspect it's going to continue to chase. One of the things you don't like seeing on the weekly is the etchings of expansion, but it's not to a level where I think it's dangerous for them just yet. If we do see 14,000 break down, that's where it starts to get dangerous for this particular market to go test substantially lower. Another 500 points lower to like 13.5 to 13.6. Daily structure is broken, closed below this low, but it's right into a weekly, right into this high side structure over here. So I could even step down in between to 13,800 area. We hit our target on I'm looking over at SPY. We finally hit our 410 to 415 target. And then, like I said, it's probably down to 405 to 400 in my personal opinion. Now this is aggressive expansion to the downside. We see that it's only just getting started. Expansion down, but keep an eye on that momentum pivot. That doesn't mean that it's not going to get continuation to these other areas. It's just more likely to get bounces. 14,260 is going to be the momentum pivot that is going to update, probably be chasing right on top of price action when it does open on Monday. Still got room to the downside here. Of course, this is playing hand in hand with the monthly looking pretty toppy and likely to turn coming into the monthly close. To be fair, though, you gotta remember context. And we'll talk more about this next week, but you got to keep an eye on the quarterlies. They're turning up, and this is mean reversion after a very big move. So daily still got room to go. Testing into that lower second standard deviation. It did open above it, so keep that in mind as well. And we're gonna, basically back above 14,365, things start to change quite a bit. This looks like a deviation of the lows here, and then we're looking back above that lower first at around 14,480, 14,500 area. Of course, it's got to reclaim these lows over here, just above there at 14.6, 14.7 region. It's actually 14.540. If it can reclaim that, and that's this guy over here as well on the wicks, I believe. 14.5 to 6. Then it's looking right back to 14.8 to 15,000. Otherwise, it's going to be down is the name of the game. Did I give targets for downside? I mean, it already almost got to 14,000. Below there, it's 13.5 to 13.8. SPY, you hit my target. Thank you. So next big target's 400 to 405 to the downside. Aggressive expansion to the downside. It's momentum is chasing on the daily, so it could put in a low pretty soon here. Doesn't mean it wouldn't reach lower later and or lower on a wick, but 413. This is going to open and be basically right on top of price. But this is saying pressure down still on the daily. Weekly is just getting rolling. Close below the lower second. Like I said, we see that low over here is going to get tested around 400 points. Below there, it's still fine above 380 to 375 or so. 375, 380, it's still fine. Below there, low's getting tested. So, and then we kind of go from there. Weekly's also getting into, this is the thing. Weekly's getting into some territory where when this close opens, it's probably going to be fairly close to price action or within striking distance on the dailies coming into the close of the month. Now, again, we're looking at the monthly lower high, lower low. If the lows get taken out the lower second, then that's a problem. 417 is also the monthly. But again, it's that quarterly has a chance to turn above 408, and it's even trading above there now. And the lows at that 375 area to 372 is where the quarterly basis is. And this is a cool down on the quarterly. This is not like an expansion to the downside. It's a freaking cool down, man. That's kind of nuts. All right. So let's keep that in mind. Now, of course, if that area did break down at the basis, then we're looking at the lows, 350, and then possibly back to go test the damn area that I wanted to see tested back in from the 19 highs at 325 or so. Prior to the, we got 325 to 330 to 335 or whatever the highs were, pre crash in 2020 and then post crash local highs that were put in. Those areas never got tagged, and I wanted to see them get tagged. We swung them and we didn't quite tag them, and I did want to see them get tagged. For those of you that were around on the initial rundown in 22, I was really hoping that they would get tagged on SPY. The post 2020 highs after the rebound from the lows almost got tagged there. I think it did get tagged. Yeah, the pre 2020 highs got tagged on Dow, and I wanted to see it follow through on NASDAQ and SPY. So anyway, I think I spent more time on that than I wanted to. Let's go look at Bitcoin. See where it's trading at. 33.7. And yeah, so above there, we're looking at 33.8 to 34K getting ran again. This is a V for Vendetta against the bears pattern right here as well. Just boom, boom. Let's go take you out at the key levels that you were shorting from on a breakdown. And, gets above the basis on the 15-minute. That's where 33.8 is going to come into play. And then the upper first is basically $34,000. So what was the 4-hour pivot? We were looking at that because that's going to close open here shortly. 34,300. So I don't think I'm going to hang on the stream here for that, but let's see. All right, let's go ahead and get the music up. I'm going to just poke through the chats here. So give me some cover music. Okay, so for you guys that are wrapping up daily close over at the shop, yeah, who's staying after? Who's staying post market? All right, all the guys that are doing tests are just gonna, okay, yeah, because of traffic, they're just gonna stay and study for a little while. Cool. All right, awesome. Let me go ahead and poke through some of the other chats here. Let's see what's going on over in YouTube land. Hello, Bobby Jedi, no name. Cheryl Spin. Hi, Spin. Haven't seen you in a while. Okay, so let me look here. Sorry. Cheryl said buy Sol. On a retrace, yeah, might be a good buy, or it might be goodbye, and it was a big trap. Who knows? We'll see. You know, a lot's going to depend on Bitcoin, especially the alts, because the alts will dump just. They might give up everything that they had, but Sol has been pretty strong. Momentum and volume of beers. Oh, y'all are having Friday fun. I see. Thank you, Landy, for your deep and extended analysis. It's fairly clear. I hope it is. I mean, I just kept saying the same invalidation levels in continuation. I answered Cheryl. Yeah, 32,800. Yeah, then I'm looking for like 30. You know, the lower term time frame, 30,000, 32.6 to the daily at 32.4. And below there, it's got room down to 31.8. And it can swing the area as long as it's not closing like higher term time frames down there. Bobby engulfed the October. There's some 10Ks on the cards. Yeah. Good luck. Dixie daily starting a bull flag. Yeah. I mean, if you're running flags, yep. Yeah, don't ever forget to take profits. Always pay yourself. Yep. Nothing is a given. Nothing in life is a given. Yeah, at least I can call new targets. Not like the 6-7 month period. Dude, the 6 months of basically just being in a giant range is like, well, it's either going to go to this target or this target until this target breaks, and then we can look up or we look down. Yeah, I mean, I'll be honest. Look, I know for a lot of you guys that are newer, it was probably a fairly difficult period. For me, it was fairly easy. For some of you that it was easy, these transitionary periods when breakouts happen are going to be the hardest part, because you're looking for it to retrace right back to where it was, and it's going to consolidate, it's going to do this, and I'm seeing this and that. It's like, well, if the breakout's real, it's not going to pass below certain levels without invalidating the breakout itself, right? 31.8's the breakout. You know, you can argue it can go down to 30,600, 3 to 6, because we have higher time frame closures there. And if it loses those higher term time frame closures, then that's a big problem for the integrity of the move up. That doesn't imply that things are just going to automatically make new lows. It becomes a probability though, but it's not you get the extremes of the conversation. Like for those of you that are starting to watch American football that are in other countries, like Bobby, I know you're one of them. It's the extremes of the conversation. Whenever the team is doing good, they're the greatest team, and the players are the best players that anyone's ever seen in their entire lives. And when the team is not doing well, they suck. They're the worst. They need to get rid of guys. They need to trade them. They need to, are they for real? Are they pretenders? It's the same emotional swing day to day in traditional markets and Bitcoin and trading in general. If you've got a favorite team in any sport, it's like when they're good, they can't do any wrong, even when there's problems, and then when they're doing bad, even if they are, top of their game, they're now they need to blow everything up and try again. And, the sky is falling from moment to moment, or it's the greatest thing in the world. And that is markets. It's an emotional experience. And when things start to break, especially different than what you analyzed, because if you're not setting, everything's conditional. Everyone's like, I want to tell me where you think it's going to go. No one cares. If you're a real trader, you don't care about where you think it's going to go. You care about what the condition is in order for price to reach a certain level, to the upside or downside. It is purely conditional. It's if then. If price breaks this, then this. That is what you're looking for. And you're not looking for it to run to these specific areas. You're looking at it for these areas to be areas of specific interest, right? And if price reaches that area, you're not looking for it to reject or continue. You are looking to see what happens. You're watching price, not predicting price. You're watching price at specific levels to look to see if there is a good trade there. You are not looking there to be right about your bias. You're looking for validation of a trade. Should I trade the continuation to the downside in these lower term timeframes, or should I trade the bounce to the upside? You're not looking for validating your idea on price. It's all about honing the good, the consistent confluent levels of interest. And when price gets there, you alert your lines, you do whatever you need to do, your indicators and yada yada, and then you are interested in a trade. Whether that trade is going to be to the upside or the downside is going to be dependent on you sitting and evaluating what's happening in there. Now look, that's different than if you're accumulating. If you're accumulating, there's specific levels that you should have picked out for where you're doing bigger buys because you're in this for the long term. But if you're trading, if you're trading, you're not investing. Investing is different. You're buying low. You wait to whatever your plan is to sell high, right? That's an investment. If you are trading the price action to the upside and downside. And your idea of where price is going to go in the longer term does not matter. And it should not matter because you need to take the trade. That's why you're trading and not investing. If you go into markets to trade with an investor's mindset, you will get wrecked. And that's what happens to most derivative traders. They have an investment mindset. They're looking at big numbers that they want to make over a very long period of time and then taking 15-minute candle trades and getting smashed. And look, most traders in this market lose because they are investors who are trying to trade. If you're a trader, it's very easy to be an investor. But if you go into the charts and you're going into your exchanges and placing orders with an investor's mindset, you're going to get freaking wrecked. Now look, that's different than if you're building out a swing trade, but you got to have your invalidation. If you're building out a swing trade, which is a longer term trade that can last days to weeks, that is a swing trade. But if you're going in on 15-minute candles expecting price action to fall to a certain level, and it might take days to get there, you're taking a swing trade with a scalp trader's. You're doing a scalp trade with a swing trader's mindset. So just keep in mind what your mindset is, what your goals are. If your goals are to make money when Bitcoin, because Bitcoin is going to go up multiple thousands of dollars, then you shouldn't be trying to hit that in a trade. You should be trying to hit that with your investment. And that's longer term, low to no risk, depending on, you shouldn't be investing money that you don't have. Same with, you shouldn't be trading money you don't have, but you don't invest money you don't have. But if you're investing for a long-term outcome. And many people are going into trade derivatives with a short-term outcome mindset. I want to make $5,000-$10,000 in the next few weeks, and I've got $100 balance on my account. It's like, you're going to lose that immediately. So, or they throw in $10,000 and bet big on high leverage on direction for a price that's just unrealistic for their time frame. And then it goes against them. They either get stopped out or scared out and lose money. So, yeah, good chat. Not quite a Landy rant, but something that does need to be said. And this is what makes transitional market periods very difficult, though, because you're used to, if you've been trading in a range for a while, it can be very difficult to adjust. But all you're doing is stepping your range up. That's it. And right now, Bitcoin's in a range, so we don't necessarily need the volume map here, but it's in a range. It's in ranges within ranges within ranges, depending on your time frame. Yeah, dude, like there's some talks that people need to probably should listen to, and who am I? I'm a freaking nobody. Like, I don't have, there's not like droves or thousands of people. I mean, there's 500 something subscribers to this channel, but who actually is watching this stuff on a consistent basis, right? They might check in on it for the targets or the short videos, but I'm a nobody. Who really cares what I have to say? But if you do care and you understand that I've been doing this for a long time, that there is, you don't have to agree with me, but there is things that you can pick up and add to your trading tool set or your investor's tool set in terms of mindset or technical skills. So, and I hope that's what you're getting. And if you're not, I mean, you don't have to watch or listen. It's free. You're free to do what you want, right? All right. I think that's going to do it for me. The 4-hour close came in, so I stalled long enough. Geez, close open right on that level, huh? Yeah, it did. It closed open. It did got a close open right at 33,000, 700 area. What's that going to look like on the 4 hours? Momentum 34,200. Just so happens to be a zone of interest anyway. It's a 3 hours closing, and with this next hourly candle, and that's going to be 33,750. The 2 hour is going to be 33,700. That is where the pivot is for the 2 hour coming into the last two candles today for the 2 hour. Hourly is looking to flip to the upside here on any closures in this next hourly candle. So hourly and 3 hour are something to watch there. And that's 33,713. 30 minute can give you a little bit of edge, but just keep an eye. It's really the last 30 minute close. So for me, the 1:30 close or the 4:30 close, if you're on the East Coast, is going to be the one to watch coming into the hourly close. So this is at 33.6. Range is tightening up here, and 33.550. You'd want to see like either a move through those levels like fairly soon with the 15 minute when looking at momentum, and then come back and get a little bit of a bullish reset if it can regain some of these levels. But again, above 33.8, I'm looking for 34 to get tested. So then above there, 34 to 34.2. If 34.2 gets taken out, 34.5, and then if 34.5 gets taken out, well, 35K is on the board, at least. Somewhere around the highs. Either way, you guys have a great weekend. Thank you for hanging out. For those of you that are hanging out over in YouTube land, for those of you that don't prefer to chat with us, I appreciate you hanging out and watching. I do see there's quite a few people watching, but just not chatting, and that's okay if you don't want to chat. I do appreciate you being here because you've been here pretty much the whole time. For those of you guys over there doing, yeah, just waiting for traffic to subside and doing close of day stuff and post-market stuff, you guys have a great weekend as well. I'm going to relax this weekend because there's no, I mean, I might tune into some American football, but, you know, maybe some of the teams that are competitive within the division. But there's no football for me to watch for a little while, this Sunday through till the Sunday after. So I'm going to actually get things done and be productive for once in my life. So you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And with all of that being said, and me trying to stall to get this thing up here, I'm just not going to have to, I'm not going to even try to stall anymore. We'll just do this. You guys have a great weekend. Thank you for hanging out with me, as always. And yeah, I'll talk to you on Monday. Landy out.